I sold gold, and so far, I've been right. A few weeks ago, I noted that I was looking at some technical overbought signals for gold, and I felt that gold might pull back. Did I sell all of my gold? Well, as I've explained in a number of videos recently, I did not sell all of my gold. I sold about 40% of my gold with the idea of rebuying it, and now may be that time. Today I'm going to talk about my technical targets on gold, and I'm also going to talk about where I see other opportunities that are related to gold as backdoor ways to get in on what I still see as a bullish trade over the coming months. Welcome to the Smart Money, Dumb Money Show. My name is Keith Richards. I'm President and Chief Portfolio Manager at ValueTrend Wealth Management. Let's get started. Well, you guys might notice that I'm in a little bit of a different environment than I typically in. Well, that's because we're doing some renovations in my other office, so here I am on the couch. I don't think you guys come here for the cinematography. I think you come here for the technical analysis, so that's what we're going to be doing today. We'll start off with a daily gold chart, and this is set up with a system that I called my near-term timing system, and it's nothing proprietary or anything like that. I simply use three indicators. I talk a lot about this in my my ongoing blogs. If you don't subscribe to my blogs, go to valuetrend.ca. You should read those because I cover a lot of more finely tuned aspects of technical analysis within the content of those blogs. Whatever the case, my near-term timing system uses Bollinger Bands, which are volatility bands. It also uses Stochastics, which is a very, very short-term moving, very quick moving momentum indicator. And then finally, it uses RSI, which is more of a midterm momentum indicator. And what I look for is concurrent indications on those three indicators, Bollinger, Stochastics, and RSI, to give me buy and sell signals. So let's take a look. So this is gold recently, and you can see it had been in a very nice uptrend. Now, what we have here is lower and upper Bollinger Bands. And what I have found is that when the price of any security runs along the bottom Bollinger Band and coincides with a bottom hookup on Stochastics and a hookup on RSI, you often get a move up. But the reverse is true as well. You can get a movement where the market is moving along the top Bollinger Band and Stochastics is overbought and RSI is overbought, then you often get a correction. And that is exactly what has happened in the past. So it's a fairly reliable short-term indicator. It doesn't predict long-term moves. But this is what we saw recently on gold. So this is one of the reasons why I've been calling for a correction. And so far, as you can see, we've been getting a correction. So what I'm looking at here is the market was running along the top of its Bollinger Band. That means it's been moving 2 standard deviations out of its normal range of volatility. Well, so that's one sign of being overbought, but when you combine it with an overbought and hooking down Stochastics and overbought and hooking down RSI, you typically get a pretty good sell signal. Now again, short-term stuff, guys. This is not, we're not looking for 10% or 15% moves here. We're looking for 5%, maybe up to 10%. So what we have seen is the signal was correct, and that's why I did that blog a while ago. We were coming into that signal happening. The next chart is something I have shown you guys before. It was one of the other reasons why I was peeling back some, not all, of my gold. And that is that this is a signal that comes from sentiment. So this is an optics, which is a collection of indicators of consumer and institutional enthusiasm, or lack thereof, of, in this case, gold. And sentimenttrader.com puts it together, and you can see the red dots indicate where the signals were very high. So this is the signal down here. And you can see that whenever the signal came in as an overbought, you often got, again, a relatively small, sometimes bigger, correction on gold. So we got one of those signals recently. In fact, it was sort of staying in that range. It did pull back, and then we got another signal, which is why I've been reducing my gold holdings. And so far, the signal has been correct. As we just saw on the last chart, we have seen a bit of a pullback. So I will talk in a moment as to my targets on gold. I think this pullback may last a little bit longer, but not much longer. And so we want to be prepared to buy. And so I wanted to talk about, well, there's gold and then there's assets that are related to gold. So this is a chart here and it's been put together by Rosenberg Research. It's just a correlation chart, and you guys have seen me talk about correlations before. Just for those who haven't seen my videos or read my books in the past, a correlation is basically the relationship of a stock or an asset to an underlying market, in this case to gold. So let's take a look at what the most correlated assets to the price of actual gold bullion. Well, obviously we're going to get a very high correlation of 0.78 in this case. So that's pretty high. A perfect correlation is 1. So you're getting close when you're getting close to, close to 0.8. So a perfect correlation is TSX Gold and of course S&P Gold. The next correlated asset that we should be paying attention to is silver. So take a look. Silver has the same correlation as the TSX Gold Index to the price of bullion. Going down the list, platinum's not bad. It's almost 60% correlated, and then palladium. From there, there's really not a heck of a lot of correlation. So what we want to focus on is the assets that are correlated to the price of gold as backdoor ways of actually owning bullion. And we'll take a look at why I'm buying, for example, gold producers rather than gold itself right now. So this is the gold miners. We're going back to 1995 here. And what you can see is that the price of the miners are the cheapest valuations compared to the price of gold. And it's been like that basically since 2015. So it's prices of the producers have been undervalued for the better part of a decade. And that's because the market's been so focused on technology stocks and high beta stocks. Well, gold's been out of the picture until just the past 12 months or so. Well, my feeling is that there's some catch up to do on the producers. And I've talked about this on my videos and in my blogs in the past. I felt from the beginning that the best way to buy gold has been via the producers. And that's why if you look at my old blogs going back a year or more when I was originally recommending to buy gold, then you'll see that I was focusing on the producers. So the other one I wanted to talk about was silver. Now remember, the correlation of silver is the same as the correlation of gold miners is to gold. So silver has a 0.78% correlation to the price of gold bullion. Well, here's silver. And you can see this is the commodity silver. And you can see that way back in 2011, it peaked out. And even with the rally in silver recently, it is nowhere near its all-time highs. Now, if we take a look at gold, well, there's the old breakout point, and there's where I was actually calling to buy gold about a year and a half ago. And what you can see is the market has moved exponentially higher, which is great. That was a call that I was making, and I don't think I was too alone on that. It was a very, very good and predictable move. But now gold, as you can see, is still pretty overbought, just by the look of it, you can see. And the more important thing is that silver has some catching up to do. If we just get back to the old highs, that'll put it still behind and lagging the price of gold. So I think there's more value in silver than there is in gold. Let's take another look, or a comparative look, I should say, at gold and silver. So the red line is gold and the black line here is silver. And you can see that when the two gap apart, so for example, silver outperformed gold back in around 2010, and you can see it thereafter fell back aggressively, whereas gold more or less moved sideways while silver was correcting. Vice versa, we have a move by gold outproducing here, and silver was outperforming, I should say, and silver was moving flat at the same time. Well, what happened? Silver moved up hard. You see that? So I just want to kind of draw to your attention that they're usually, as you can see, typically they move pretty much lockstep. But right now, take a look, gold, the red line, has been vastly outperforming silver. So in my opinion, if we zoom in on this, you can really see that relationship. In my opinion, you're going to see gold and silver move back together, and that's likely to happen with a stronger move by silver than gold. Final thoughts on gold versus silver is that gold producer bull runs in history have been somewhere between 156%, 180%, and then again another 156%, depending on the period of time where we saw the massive gold bull runs, okay, gold producer bull runs. Silver bull runs, okay, conversely, 260%, 230%, but right now, take a look, so far the silver bull run is up about 100%, versus gold, which is right in line with its typical rallies in a bull run. So what we can see here is not only is silver only at about 107% in its complete rally over 2020 to 2025, gold during that period was about at the same level as its previous two rallies. Silver is way behind its previous two rallies. In fact, it's about half as much as the previous two rallies. And if you'll note on this chart, the two previous rallies offered actually more upside than gold. Final thing I'd like to mention is that you guys know I have been talking about base metals lately. Now, base metals have done nothing so far. So since 22 to 25, base metals are only up 43%, which is way behind the markets. But in the past, we've seen some pretty big runs on base metals. So one more thought is that base metals might just have some upside as well. But we're here to talk about the relationship to gold specifically and silver. So that's just a food for thought thing, is that I still like metals because I think they have some room to go based on their own merit. Well, I promised you at the beginning of the video I'd give you my near-term pullback targets and where I am going to become interested in rebuying the gold producers that I sold about a month ago. And so let's take a look at where my targets are. This is just straightforward technical analysis. This is the 50 and this is the 200-day moving averages. I don't think gold is going to retreat to either one of those, although it has in the past. You can see sometimes it has retreated. But my feelings are is the last peak, which lies around, I'm going to say 3150 or so, is a probable target for a pullback. Now, you may not see gold get that low. It may hit 3,200. But the point is, I think it's got a little bit more room to go before it washes out the excess, that super parabolic move that you can see on the chart here. That's going to be washed out, and I think it might retreat a bit. So that's my target right now, is around 3,200, give or take, for gold. Now let's take a look at silver. And what I want to show you here is that resistance on silver has been around $34, $35. Well, it recently hit that, fell, rebounded, and what we're seeing is that we're starting to see a small pullback in sympathy with gold, but not nearly as great. Well, my thoughts on silver is it'll probably get back to around the 50-day moving average, which, if we zoom in a little bit, you can see is around 32 or so dollars. I like using round numbers, by the way. I'm not going to say, I know the chart, if you look at it closely, will say 32.61, but moving averages are moving targets. And so I'm going to say somewhere near 32 for silver. I think it'll be very interesting. And it doesn't mean that silver has to retreat to $32 to buy it. You just watch it, and as it approaches 32, you should become more and more interested in buying silver. So those are my two targets, both 32. So 3,200 for gold, 32 for silver. Doesn't mean you have to buy exactly 3,200 or buy exactly at 32. It does mean that as those levels get closer, if the sell-offs continue, they become more and more attractive as buying points. The next thing is, remember, I'm focusing on producers rather than the bullion itself. I think the producers offer better value, and I think some of the charts I showed you today offered proof to that thought. I wanted to ask you guys a question, and I would appreciate it if you would offer your comments below on this question. And the question is, would you guys be interested on something like a day in the life type of video where I have a professional producer come into my office and he tracks and follows and interviews both myself and Craig Coyne, the fundamental analyst at ValueTrend, and you guys could sort of see the inside scoop on watching Craig and I make decisions through the day, how I operate, looking at my charts and that kind of thing, and then how Craig operates, and then how we meet and have discussions on the concepts and stocks that we are looking at buying or selling. So I want some input if you guys would be interested in us doing that, because it would be a bit of a production. I'll have to bring a professional in to do that. But if you are interested, I'd be happy to do it. I think it would give you guys insights as to how professional money managers operate, and maybe you might be able to take away some lessons from that and some thoughts from that. Give me some insights yourself on the comments below, and we'll act according to your wishes. Hey, thanks for watching. I hope you got value out of this episode. Please like and subscribe below. We're trying to grow the channel, and it would really be doing us a big favor. I'm presenting ideas every week on trades that we're actually looking at ValueTrend. And by the way, I don't just talk the talk, I walk the walk. I have been a portfolio manager for 35 years. And in fact, I was one of the very early pioneers in technical analysis here in Canada. On my website, ValueTrend.ca, you will see a link for our online trading course. And this course is a complete money management system. I do encourage you to take a good look at that and consider taking it. I priced it extremely low because I want retail investors, that's you, to take the course and get value out of it. It's literally my 30 plus years of experience put into one complete step-by-step course. And honestly, I wish that I had had something like this when I was an early investor. It really will stop you from making so many mistakes. I also suggest you subscribe to our Never Miss an Opportunity program, which is our blog and our newsletter. There, you're going to get ongoing ideas, tons of charts, lots of trading ideas. And by the way, we never, ever solicit. We don't send you junk spam and stuff like that to try to get your business. It's for information, because part of my passion is to teach retail investors how to invest properly. I've been doing this, as I said, for 35 years, and I hope that I'm able to pass on some of the things that I've learned through this career as both a pioneer in technical analysis in Canada and a longtime portfolio manager. Thanks for watching. Don't forget, push like, push subscribe. See you next time.